everyone. My name is Michael Goff, and I'm Principal Product Marketing here at Revenera, and I'd like to welcome you to today's webinar, AI Monetization Unlocked, Master Pricing Models and Plan for Market Success. Today, we're joined by IDC's Tiffany McCormick. She's Research Director, AI Monetization, Pricing Strategies, and Business Models, and also by Revenera's Paul Bland, VP of Product Management. They're going to share the latest trends in pricing models from buyer and vendor perspectives, and then do a deep dive into the considerations for a wide range of AI monetization models. It should be a good conversation. Before we get started, though, let's go over a few housekeeping details. First, today's discussion will be roughly an hour long. There's a lot to cover here. If you have questions or comments, please put them into the chat tab, and we'll try to answer them. And if we don't get to them, we will absolutely follow up with you individually after the event. Please be sure to check out the Docs tab, where we've shared a number of resources relevant to today's topic. And finally, we will be sending you a link to the recording in the next 48 hours. So, what are we going to talk about today? Obviously, AI monetization trends. We're going to dig in a little bit to software monetization models and the evolution. And again, as I mentioned, we're going to take a look at some of the research Tiffany and IDC have done from buyer perspectives, and then research that Revenera has done from vendor perspectives. And then the meat of the discussion, AI monetization model examples and considerations, and then finally some thoughts on how to go about implementing AI monetization models yourself. So with that, let me hand things off to Tiffany. Tiffany?
Absolutely. Thank you so much, Michael, for this opportunity. I really appreciate it. What I want to talk about is what we saw in 2025. 2025 was the year of AI ROI, right? Product leaders, product owners had the question, we've already built AI into our product. Should this even be monetized? Because it's seen as AI is everywhere. It's in all the products. Is it a commodity now? What's the point? Right? Our leaders are questioning the ROI of all these investments they're making. Wouldn't it be easier to just include it into our existing offering? And what I found was interesting was that I spoke with over 400 or 500 leaders at different SaaS companies. And the interesting part is I spoke to product directors, product VP of product, maybe even some chief product officers, right? I spoke to marketers, chief marketing officers, VP of marketing, but I hardly ever spoke to the pricing team. So a lot of these monetization and pricing questions are coming from the product leaders and the product owners. So I think as we look into what's happening in 2026 and what will happen, we want to focus on getting the ROI for our AI investments. What have you guys seen over at Revenera, Paul?
Yeah, I mean, it's a really interesting point, Tiffany, and that what it really shows us is that AI is driving the monetization question faster than anything we've ever seen before. And you know, your quote here is quite eyebrow raising, because the mere fact that it is an afterthought indicates that there's a problem, and organizations, vendors are really starting to think, how do we make AI monetization a discipline rather than a feature in the product that we implement at some point along the journey? It's being forced up front, not only into the leaders of product teams, but also into finance organizations, to try to think coherently and strategically, certainly about AI monetization, because if it isn't monetized and isn't profitable, it is a problem waiting to happen. But also the fact that it then makes everyone reflect on monetization generally, on what the overall strategy is.
Absolutely. And what was interesting is that, as I mentioned, I didn't speak with that many pricing people as I spoke to product and marketers, or product marketers even, that a lot of the information I gave and the strategies started with basic pricing, business acumen, basic pricing, tiering, and packaging structures. And so starting, of course, with the history of how we got to where we are with this monetization problem, how we went from starting with licensing and perpetual licenses and helping the product owners understand the reasons and the market drivers that led to some of these shifts in software sales models, right? So when we went from perpetual to subscription, which is what most of the industry is in right now, that was driven by the need for flexibility, right? That was driven by the need to not pay huge upfront cost and instead manage that cash flow and that forecasting a little bit differently via subscriptions.
Yeah, actually, the history of the evolution of monetization and pricing models is really instructive because, as you say, there is this kind of buying habit and preference that's influenced it. It's also deployment models that have influenced it, where we've gone from on-prem, device-based, through SaaS hosted in data centers to SaaS hosted in the cloud. And then now finally AI, those kind of deployment models have been influential. That's changed the cost model that vendors have been faced with, but it's also made vendors think about the user engagement. How do users and devices interact with the applications? And when you start thinking about users, that reached its height with SaaS applications, and now AI are making people think, making vendors think, well, what does the user mean here? Is the user really always going to be at the center of things? How's the balance between the device, the user, and the agent going to look as we move forward?
Yeah, and it's interesting that you brought up 2 points I want to pull out here. The change in the cost structure, right? That really drove a lot of the consumption or the usage-based pricing
Yeah.
models or pricing sales models. Pricing based on either the actual usage or the pre-agreed usage. Because what vendors began to face is the cloud providers, the AWS, the Googles, Microsofts of the world, they charge vendors by usage. So if your
Uh-huh.
cost structure is in usage, but you are selling in subscription, your revenue gain is in subscription and per user per seat, vendors really needed to take a look at how should I re-engineer this, change my business model even, so that I can continue to make money. In addition, as we think about subscription and what AI, to your point about agents, has brought, vendors or at least in 2025, vendors took a very hard look at what is the actual value lever. What is
Ah,
my product bringing? What is it driving? Because if my revenue business model is in seats and users, but my product drives optimization, it drives workflow reduction, right? Then businesses or buyers would forecast that they don't need as many seats or they need less seats or they'll keep the same number of seats. So it's to prevent a collapse of their revenue in the
correct.
future from their own product. A lot of vendors have moved into consumption. And to your point with agents, we're starting to hear a lot about outcome-based pricing.
Yeah, correct. That's right. And you know, you mentioned the focus on revenue, and for years, the only thing people were worried about was growing revenue. But now vendors they want to keep growing revenue. They've got to preserve margins as well, and they're starting to look at the profitability of what they're
Mm.
offering in order to see whether margins are being eroded. And of course, there's also the valuation topic, which hasn't gone away. Valuation is still heavily focused on that idea of recurring revenue. So, what role do these monetization model types that you've got here in the slide? What impact do those different models have on that valuation topic as well?
Absolutely. And we look at, the model types of credit drawdown. We hear about that now, credits, tokenization. And what about the revenue recognition? We're talking about how your investors look at it, how net revenue retention or ARR,
Mm.
these pricing metrics that worked for, and I say pricing metrics, but business value metrics that worked well for subscription, they don't fit as cleanly and as easily to consumption and outcome based. So as a lot of product leaders and marketers and pricing teams are struggling with where to go and how to monetize, they also have the bounds and confines of what will their investors and their C-suite leaders be able to accept so that they can explain to the market.
Correct. Yeah, that's right. So it's interesting. This diagram, it gives us a history of sales models and also a history of what we used to call uh, licensing model types. Now we refer to them as monetization because they are controls for influencing how products are sold, how the revenue is realized. Do you see in your research that there's an emphasis on one of these, or are we looking at a blend? Are we looking at a shift, or is it just a growing selection?
That's interesting. And I'd say 2025 was a growing selection of just the entire spectrum of whatever you could do.
Mhm.
One of the things we talked about before was the accelerated pace of experimentation. 2025, vendors tried whatever they could do. We saw
Right.
hybrid pricing models, subscription plus outcome based. We saw tokenization plus subscription. Vendors were trying many, many different things in order to see what fit best. So I think
Uh-huh.
2020, while 2025 was the year of a lot of mixture, I think we'll see some of that, especially in the beginning of 2026. But towards the end of 2026, going into 2027, I do expect to see some level of consolidation. And a lot of that is driven by this buyer survey we did, where we talked about where I asked questions on the future of monetization for software businesses, right? And one of the biggest things or what stood out to me was that usage base, whether prepaid or postpaid, practically tripled. Buyers prefer that within the next 13 to 24 months, they truly want usage based. So I
Hmm.
thought as we looked at the evolution of where things are going, and as I hear vendors talk about outcome based and tokens and credits, but the buyer end, they are looking at and they prefer usage.
Okay. Why do you think that is?
When we think about where we are in the AI journey or where different businesses are, some businesses are in that FOMO, the fear of missing out. They're just tossing products out there so that they can keep their name, in the
Yeah.
news so that they can say they're innovating. And a lot of them are doing AI just for the sake of saying they have AI. It's not necessarily tied as much to a direct product or buyer value. So if I am a buyer and there are so many AI tools, there are so many vendors, it does seem commoditized. And how can you tell the difference? Not only from the vendor perspective, but as a buyer with my products, with my workforce, what are things going to look like? There's so much uncertainty just within AI itself, not to mention macroeconomic uncertainty, right?
Okay.
Tariffs, changes in regime, this and that. Buyers need flexibility. So
Okay.
what we have found is that usage based from the buyer preference perspective offers them the flexibility that they need because they're able to either prevent bill shock by having prepaid usage. So whatever their bill is and their usage, that's what it's going to be in advance. Or they have the flexibility of not knowing exactly what they'll need, but having the product flex with their usage. So I see the uncertainty in AI and macroeconomic trends driving a lot of this usage base.
Yeah. So there's flexibility, I guess, in multiple ways, being able to regulate their own usage. There's flexibility in terms of not having to make an upfront commitment, but they can delay that commitment. And of course, also there's flexibility to be able to switch from this product to that product with relative ease because they're not tied into a longer term subscription. It's quite interesting to compare this data with the vendor data that we've been seeing. If we could just go on to the next slide, right? We see in much the same way a distribution across these models, across subscription, usage-based, prepaid, postpaid preferences. Although, as you might expect, vendors are more heavily invested in the subscription approach. That's partly historical. It's partly to do with the fact that subscription more naturally feeds into ARR, and therefore, the company valuations that are being sought. However, usage is also being introduced amongst vendors, and there are a number of reasons. In talking to vendors, a number of reasons for seeing this. One of them is obviously to give buyers the kind of buying experience they want. That represents success. However, it's not always to do with that. The reality is that a couple of years ago, vendors started waking up to the cost implications of cloud hosted. That became even more acute with the cost of AI tools. And although the pressure is there, as you pointed out, to include AI, because if you haven't got AI in your product, we're getting to the stage where you're not even considered amongst the options.
Yeah.
But you can't. That's not a viable monetization model for future success. And so, alternative ways of monetizing these features, and AI is not the only kind of feature which is driving this. Any kind of high performance offload is going to be expensive to provide. But if the focus is only on that cost recovery, it just becomes a cost plus model, which is, again, not sufficient. And the reality is that the AI and these other things add value to customers. And whenever there's customer value, there is a monetization opportunity. And usage gives you the way to home in on that customer value and monetize it at the point at which it occurs. So what we're really seeing happening is a blend amongst vendors of subscription to get that base revenue with usage to enhance the revenue story whilst maintaining costs, and that's proving, I think, to be fairly acceptable and fairly popular with buyers because, and particularly with the prepaid model, it reduces the possibility of that bill shock, but they also blend with that a postpaid element. So overage could be paid, could be handled using a postpaid model. But one of the things buyers are increasingly uncomfortable with is uncertainty, as you said. And so along with a paid approach, there has to be visibility. End users need data regularly to be able to monitor their expenditure, and they need guardrails to be able to put limits and warnings around it. Because if anything happening invisibly that they're then going to be surprised by is going to be extremely unpopular, and buyers will then lose trust and the model will fall apart.
Absolutely. And to your point about thinking about both vendors and the buyers, when I thought about what is causing the vendor to increase in subscription when buyers themselves are expecting more usage. And it takes me back to one of the first points I made. A lot of software vendors did not invest in their pricing acumen. If they would purchase or they would hire software development engineers, data scientists, product managers, eventually there would be a pricing person. So when vendors would struggle now, vendors are now struggling with how to answer this monetization question, they're going to the simple answer of let's just do subscription and add on some layer of usage to protect us from cost, to protect us from revenue, to protect us from, or to allow rather our buyers to flex in their usage, as you just mentioned. And what's interesting to me is that when you go the hybrid approach, do you know if you're actually tapping into the value of your customer? Do you actually know if you're tapping into what exact metric is valuable to them? And I thought that was a great point to think about when I looked at the increase in outcome-based pricing. Because it seems as if what vendors want to say is, or really just regular pricing acumen is usage-based doesn't exactly tap into the value, right? Because just because I use it 100 times a day doesn't mean I get more value than the person who uses it only 10. So trying to look at, and this is where I see things going a bit more, especially with agents, trying to look at outcomes as a better gauge of the value that your product brings to the buyer.
Okay, so the challenge there then is, that's right. You can look at volume of access and you could say that's a proxy for value. That's an indicator of value. But it may not be. There might be other causes. So do you see any trends for ways in which vendors try to identify the value?
Interestingly, I found more roadblocks than ways that they've been able to identify,
Okay.
and largely because it's a data problem.
Yeah.
Vendors have not, and buyers alike, have not had to think about usage or metrics for the most part. So, how do I know which metric actually ties into more directly what the value is? If all I, as a buyer, had to think about was the seat, and with that seat, I get unlimited access. Now I have to limit my access if I do prepaid, but based off of what metric? So I've actually seen buyers struggle a lot, by buyers, vendors struggle a lot more with a hybrid or a usage-based model because they have not thought in terms of usage either, because they just sold seats. So they haven't thought of it, the buyers haven't thought of it, and they don't have the data to back it up. So so
Right.
with
Right.
postpaid, that's leading to a lot of bill shock.
That's right. That's right. So it's not just about your buying or your selling model, right? It's not just about how you package. It's not just about how your users get access. It's even not just about how you bill. It's how do you get that data? And the more data you have, the more possibility or more opportunities there are to sift through that data and find the value metrics. And once you found the value metrics, they're the billable metrics, aren't they? That generate the revenue. So, and the key is not just having usage data, but having all your monetization data in one place, whether that's generated by traditional floating models, traditional SaaS user-based models, or usage, having it all in one place, because that value analysis has to look at usage activity and traditional license activity and draw a comparison in order to see where the crossover point is, where the monetization crossover, the kind of value and the break even
Mhm.
points are, where usage makes sense or subscription makes more sense. So, but it's all about the data and the centralization of data in so that the data is easy to access and then easy to analyze.
Exactly. And to that point, when we think about having data or not having data, as we pulled up some of the use cases for some of these pricing models, I considered what is exactly the problem, right? So I did a MarketScape where I rated some subscription and usage management vendors. And one of the glaring things that came out is some of the questions that they're being asked by their buyers, right? For that they want their software to do, what buyers want their billing companies to do. And what I realized that we talked about is that they actually have an entitlement problem, right? Because if we
Right.
are trying to do outcome-based models in this use case example, based on measurable results, there needs to be one place for this measurement to take place. You can't
Indeed.
have disparate siloed systems and one is saying this there, one is saying that there. You don't have as much ease of automation, right? So when vendors are considering these different pricing models, they were leaning or they are leaning onto their billing companies, not realizing that they actually have an entitlement problem.
Right. Right. Okay. So dispersal of data is not very helpful. If your data is in various order management systems and CPQ systems and billing platforms, it's going to be hard to pull that together. It all needs to flow through one central location. So
Exactly.
let's
And so when we think, oh, go ahead, Paul.
no, you keep going.
Well, when we think about the dispersal of data versus putting it all together in one place. Imagine you're a vendor and you have that multiple product or that dispersal of data and you're trying to do outcome-based pricing, right? What we found is that it outcome-based pricing is more helpful for a vendor that has a single product. And this is really driven by when you have a single product, you have a single outcome. Things you're able to see where the measurable results are. You're able to easily and quickly understand what exactly happened and tie it to the value derived. So the buyers are able to, one, trust what you're doing, and two, you as a vendor, you have control over what's exactly happening, because again, you don't have disparate systems. You have a single product, you have a single outcome even. So that makes it even more scalable, because I had a vendor ask me the other week, how can we scale this outcome-based product? But they had a single product, but that one product had multiple outcomes. One vendor liked it for X, the other vendor liked it for Y. That's not really scalable from an outcome-based pricing model. What do you guys see from outcome-based perspective?
Yeah, I mean, the key thing is that for outcome to work effectively, you've got to have a line of sight to the point at which the customer derives value. And how you achieve that line of sight is one of the challenges, isn't it? Can you build it into your product? Are you looking for some kind of feedback loop from your customer that indicates success or failure? The intercom case here is quite interesting. They infer that if they don't get any more questions, that the customer has had a successful outcome. But having a single product with that line of sight really helps. And the key thing about outcome-based is that your outcome data, it has to be easily accessible, and that's more easily done with a single product. It has to be attributable, so you can attribute the value derived to the actual activity that's taken place. And it needs to be auditable, so you've got to guarantee that the data you're getting through actually is a true reflection of the value that's being derived.
Exactly. And even thinking about this intercom example of their Fin AI agent, one of the key considerations we put up here was risk. And it's important to know that they say it's confirmed only when the AI has resolved their issue or they don't ask for more help. What is the risk that there's something else that could happen? That's the risk as a vendor you have to take on. Is it that can a buyer complain, oh, they didn't answer or resolve, why am I being paid, why am I paying for this, and they never actually resolved it for some other reason outside of those two? How likely is that to happen? So the lower the likelihood of some sort of exogenous variable causing them to feel as if their outcome was not actually succeeded or measured, the higher your opportunity to have control and have an opportunity to do outcome-based pricing, because that risk is actually, it could be pretty big, because you have to consider every single thing for a vendor to say, or a buyer rather, to say, I didn't actually get my outcome, I'm not paying this price.
That's right. And of course, if the outcome really wasn't successful and the customer gets charged, that's not going to lead to a happy customer. So that's the challenge of outcome pricing. So what happens if we have more than one product in the picture then?
So one of the things to the point about more than one product, and we mentioned this before, and buyers are clamoring for this, and that answer is flexibility. When you want to be able to say how much you use, or in this case, we use the prepaid example, is based on what you forecast that you're going to use, right? So if a buyer is in and this goes back to one of the things that you're considering your pricing models, you need to know your buyer persona. You need to know what your buyers care about. If your buyers care about predictability, if your buyers care about not wanting bill shock, not wanting any level of uncertainty, then in this case, but you have a multiple product system, then in this case, usage-based could be helpful, because you could do usage-based with some sort of wallet share, where you enable them to use all of your products for one price. So I think in this case, a prepaid usage base could really help with that type of buyer persona. What do you guys see in Revenera?
Yeah, yeah. I mean, this is a fairly common model. It might also be coupled with, and it probably needs to be coupled with you kind of buy a package that gives you some level of usage, and if you run out of that usage, you can buy, an add-on for a billing period. I think the key is that customers don't want to be surprised by having suddenly run out of capacity when they're trying to run some business process, assuming that this is actually being used in a business context. They want warnings, and any enterprise buying this kind of capacity is really going to want not only the capacity, not only the application, but also the information. So the ability to put guardrails around what they're using and to be notified when they're getting close to the point of exhaustion so that they can proactively replenish or plan their business load to survive the billing period until they get replenished. So,
Yeah,
from a
and that's like the Claude example.
yeah, exactly. That's right. Yeah, but from a business perspective, this kind of flexible usage across the portfolio, makes sense because you really want to reduce the barriers between the different products and let customers just flexibly choose what they're going to use.
Absolutely. And then, Claude and a lot of these, native AI, we'll see a lot of the usage based from a prepaid perspective where you pay up front for a specific amount of usage, right? And they try to let you know, hey, you are out of your usage. It will
Yeah,
restore X amount of date. So prepaid usage from a business perspective, having a dashboard so that your buyers will know where they are, how much they have left, and how fast
right.
they're running through that usage. All of that is important from a metering perspective, as well as any credit rules. They should probably also have the opportunity for upsell. If they're running out of usage much faster than they expected, you should have some level of governance to know, okay, they've ran out. Could we offer them more usage and at what price?
Right, and with relative ease as well. You don't want to make it hard for your customers to buy extra capacity. The more you can sell, the better. Yeah.
Absolutely. And then
All
when
right.
we think about prepaid versus postpaid, to the point about extra capacity, as we look at it, with postpaid, you don't have to worry about that problem, right? You just pay as you go. You use exactly what you have, you pay for exactly what you've used with no limits. And it simplifies, of course, from a vendor perspective, that revenue recognition aspect. And you can also get customer insights. And I think this is something that vendors underestimate. Being able to know what of your product is being used by whom and how much. In the postpaid example, you allow them to grow as much as they can. There's no preset limits, and you can give them almost similar in the prepaid, but like a wallet share as well. You have multiple products, multiple deployment models. You let them flex up. If in June they're doing some supply chain effort, they can flex on the supply chain one. But if in December they're working on the human capital management effort, they can flex that way, all without having to renegotiate a contract.
Correct. That's right. So when where different projects are involved with different disciplines, that's naturally going to lead to different applications, and so the customer, the buyer, needs to be able to switch from one to the other with just no friction. You were mentioning about the prepaid and postpaid, and the other thing that we're seeing in the enterprise market is that there's some level of caution with vendors against just adopting a postpaid model. There needs to be a high level of trust to allow that to be the primary model. Vendors much prefer to have that billing stage at the beginning of consumption and maybe allow some overage with chargeback at the end of it. Although a replenishment model, when things get exhausted rather than an overage, is often a more prudent approach that vendors take. So you've got the AWS example here. So I've got some views on this, from a vendor perspective. But how do you see this from, representation of your research in IDC?
Well, with AWS and most of the cloud providers, I don't want to, they have the pay only for what you use, no minimum charges, no usage limit, termination fees. What that does for the vendor is it varies their cost basis. And we mentioned this before, it introduces a level of uncertainty that a lot of vendors have to swallow for the most part, and then pass on that uncertainty into certainty to their customers. They have to figure a way that even if their costs are uncertain due to the usage of their customers, they don't pass on that same level of uncertainty. So even if you're doing postpaid usage, you still have to have some level of transparency, some clear metering. They still have to see where their bills are scaling, because you don't want bill shock. Even if they understand that their usage will go up for whatever, time frame, they shouldn't be shocked by what the bill is. They should see as their usage, they should see their usage trajectory and know where their bill is headed.
Yeah, that's right. Of course, AWS, the other cloud providers, they do a great job of providing that kind of visibility with dashboards. What vendors who use their hosting services need then is to use that data to forecast what their costing is going to be, so that kind of shock is less there, and they can work within budget. I mean, every person using these services needs to be able to budget for the upcoming year on the hosting costs. So the AWS model is quite interesting because any buyer can prepay, so they can buy a package of capacity which they can then consume on any service, and then anything that goes over that they can then post pay. So AWS really they've been driving the evolution of monetization approaches for years, partly because the cost model has made vendors have to rethink, but also it's a very neat presentation of this basic idea that we've talked about of having a subscription, buy your core capacity, then pay for your excess capacity on top of it, which provides that kind of flexibility. And the visibility, the dashboards give continual visibility in what's happening, so that the potential for shock is mitigated as far as possible.
Yeah, so when we think about potential for shock, tokenization comes up, because the thought is that when you have tokenization, the vendor can define what you're using. The vendor creates that unit of value. So that gives the vendor an opportunity, when you have multiple products, services, and features, they can unify that pricing. They can make it transparent. They can make it easy to understand, and that allows the buyer flexibility to allocate those units across different departments and capabilities. Hopefully, in this case, it will prevent the shock, because they'll know how they are allocating the tokens that they have pre-purchased.
Yeah. So in the simplest form, think about usage in the simplest form. You might think that there's just the customer activity, which is the usage, and then the billing stage, which is billing for that usage. What tokenization gives you is something in the middle, which is also almost a secondary medium of exchange, where anything that you want to make available to your customers, and it might be applications, it might be capabilities, it might be system resources within the application, it might even be auxiliary, what we could call digital experiences that the application enables. But it's a medium of exchange where everything that's used can be assigned a token value, which then allows a consistent value measure to be applied right across the portfolio, which then separates the comparative value. And the comparative value is important because it gives you insights into the outcome that's happening. But it separates that from the billing stage, the dollar stage. So the dollar stage could be used for discounting without really skewing the value comparison that takes place across the portfolio. The other thing, of course, it does is it lowers the barrier of entry. If you have a very wide portfolio, and that's really what this diagram is meant to portray, an organization with multiple divisions, multiple geographies, many products, and often the barriers of entry and the obstacles to cross-selling across the portfolio can be very high, particularly with subscriptions because of the upfront decision-making process. Tokenization removes that because the only decision the buyer has to make is how much token capacity am I going to buy, and then can consume those tokens on a drawdown basis during a billing period at the point of need. So it just abstracts everything to give a consistent comparison and a consistent access point.
Yeah, and like SAP, they have their Joule for their SAP AI units. And I think it's interesting. One of the first things we say is key consideration, unit definitions. Yeah. What is a SAP AI unit? Like what exactly is that? Right? And maybe, and what you want from a marketing or your product perspective when you're doing tokenization is clear and consistent messaging. If I ask multiple people within SAP, they should have the same answer for what a SAP AI unit is, right? And that conversion logic for what does a unit get me in terms of using your product or your product portfolio, or services. And that's how SAP allows it, right? You can flexibly use multiple solutions without having just a specific business product or whatever. And here we have with entitlements, right? And revenue recognition. They expire after 12 months if not used, right? Because you don't want to just keep rolling over credits like mileage, airline miles and hotel credits, right? But what you want is to control and have governance over that revenue recognition. And I put here entitlements because when you have multiple products, multiple deployment models, multiple companies, multiple opportunities that different teams can use the same wallet of credit units tokens, how can you control that and make sure that everyone is using the right amount?
Right. That takes us back to the point we've made earlier, isn't it? That it's essential to provide visibility. So buyers, they want visibility into what they've purchased and what they've consumed, and they want the tools to be able to ensure that the source of the budget can then reflect the consumer of the budget, so that, if one team or one division provides the money for the tokens, another division can't come along and consume those. And that control can even come down to the individual user or individual consumer, whether it's a person or an agent, to be able to put controls down so that nothing can go rogue and just eat through what's been purchased. So that the controls and the visibility are absolutely fundamental to achieving good usage-based monetization.
Yeah, so let's talk about one that we are seeing a lot of now. And vendors are talking, and we spoke about this before, as vendors are currently in most largely subscription, and they're looking into the future to say, my future revenue is either stagnant or decreasing because of the usage being, because usage being my main billing model. How then can I do something quickly? We're just going to add on usage. That's one of the quickest and easiest ways that vendors have found to monetize their model, because the majority of what they're doing, they already are doing with their fixed subscription revenue. And then they add on top that variable consumption revenue. And like we mentioned before, where a lot of vendors actually are still getting tripped up is, what should that metric be, right? How can you meter what is being consumed? How can you figure out what even the thresholds are? Is it prepaid usage? Is it postpaid usage? They still have to answer those questions. And I think Cursor here is a good example because their recurring subscription and what they have added for their consumption is their AI powered units. So it's not necessarily AI powered actions. So it's not consumption of anything. They have narrowed it down to say we have basic subscription. And if you want to use our AI powered actions on top of what you already do, that is what's the variable consumption.
Right, right. And I mean, this cursor model, that addresses a problem that's faced users of software, and particularly at the industrial level, for decades. I want to buy a capacity of licenses. What happens when my licenses run out? Does my business just stop? And of course, with subscription plus usage, your business doesn't have to stop. You can reach the ceiling of your licenses, and then you can just start burning usage capacity in order to keep things going. But this diagram's really interesting because it also illustrates this idea of subscription plus usage being the way monetization seems to be going now. One of the things I always think looking at this graph is that it's very peaky and trophy. And of course, that's not an optimal situation. It might indicate where you are to begin with. Where do you want to get eventually? Actually, you want that purple part to be relatively stable as well, which takes us full circle back to the metric question, doesn't it? You know, finding the metric that represents the consistent source of value so that usage is a mechanism for growing revenue, not just protecting margins, but actually growing your overall revenue story.
Exactly. And at that point where you decide the threshold of where your subscription ends and usage starts, that's not a billing problem. That is an entitlement problem, right? That is figuring out who gets access to what when. And so I think when vendors are considering billing vendors, when they're considering doing hybrid subscription and usage, of course, the benefits are that predictable ARR, right? Because you have that base level of subscription. And the benefits are if your buyer has not thought in terms of usage, so you don't want to toss out a fully complete usage base, whether pre or postpaid model, you can now start tracking, right? Okay, well, let's do subscription based and then let's track your usage so we can get a baseline and figure out what this meter should be. But then how can you make sure all of that, like we mentioned before, is in one place and that you're accurately capturing the right data?
Right, right. So what you're saying is that combining subscription and usage isn't just to do with the pricing, and it's not just to do with the billing stage, but right in the middle there, that you need to think about the interactions between your subscription entitlements data and your usage data in order to see them in combination and understand the big picture.
Absolutely. And you know what? This actually brings up to the next screen, which is what we at IDC call the recurring revenue management life cycle, or the recurring revenue management life cycle. And what a lot of vendors don't realize, not to make this an entitlement ploy, but I want to help vendors realize where you might be failing in your pricing model because you're attributing your problem to one solution and you actually need another. Right. So if we think about offering catalog management, channel management, customer portals, guided selling, your inventory of your software, right? Who uses what when, your usage enforcement, reporting and dashboards, offer insights, the intelligence that you get from your customer value and their transactions, their risk, that buyer persona, all of that is actually tied to entitlement management. And a lot of vendors don't realize that if they want to have controlled access to their software inventory, if they also want to have intelligence, you also want to have the opportunity to experiment. right? Without having to completely negotiate contracts over and over and over again, and to have data-backed monetization insights, you actually need an entitlement management system that would solve more problems than you think it would.
Right. This is an interesting illustration, pictorial illustration of the problem that we talked about earlier of when data is dispersed around a variety of back-end systems, it's very hard to build that overall picture. And what you're saying is actually, where is the place to unify that data? And actually all these ideas and questions and needs come back and center on the entitlement management question.
Absolutely. It allows you to flex your pricing model and your pricing opportunities and options if you tie it to an entitlement management system. So how do you guys do it at Revenera? How do you guys run your entitlement management?
Okay, so I mean, the next slide, if I just go on to the next slide, our products, oh, I've gone too far. Right, so, Revenera's products sit right there in the middle of the entire quote to cash process. So, and our products are really about that entitlement management need. Sales orders which happen upstream in the CRM or the ERP application are fed through to the Revenera system, which tracks three critical elements of data that vendors need to know about. One is, what are your entitlements like? What are the quantities of entitlements? What's the turnover of entitlements amongst your customers? But just having the entitlement isn't sufficient. You also need to know what the provisioning is like. Those entitlements need to be provisioned somewhere to be made available to customers, buyers, to get an indication of their intent to use. And then finally, the usage. So they may be available to end customers, but they might not use it. And you want to know whether they're using it, what features are they using most, what are they using least, where's their peak usage, where are the denials happening so that they're running out of licenses. And in addition to this, Revenera provides those services, traditionally called licensing services, we call them monetization services at the moment, which control and track access to what has been purchased. And you introduced the idea of tokenization earlier, and our dynamic monetization service provides a capability called elastic access, which is exactly what you have described. It's the ability for vendors to sell what we call tokens. Vendors often call them credits. Credits is actually a really popular term for it. Software currency units, something like that, to customers. And they can be spent on anything that's in the portfolio. It might be the entire portfolio, or it might be things that vendors choose to expose to this token consumption. And those, or the rates at which those tokens are consumed, all defined in a separate rate table, which is completely separate from application logic. It's separate from CPQ systems, and it can be changed very, very flexibly in order to create those experiments that you talked about, in order to create achieve promotions, maybe to enable easy contract renegotiations, and so on. So what happens is that the application, any application you have, can just make calls into elastic access with the thing that needs to be consumed. We're on the topic of AI, so some kind of generative AI query, maybe a generative AI response, or some agentic AI activity, or even a result that can simply be sent into elastic access, and the consumption is calculated from the rate table, and then that data is sent through to our data warehouse to be used wherever you like. It can feed back into the sales cycle for conversations. It can be pushed into reports to show customers what they're using, and then pushed into the billing platform. If it's a postpaid model, if it's a prepaid model, it will have already been through. So what this does is allow producers, vendors to create that abstracted idea, that value measure of a customer's usage or customer's outcomes from the dollar question, but still to be able to track that usage real time and make active and intelligent use of the data.
So what I hear you saying is data, data, data. Well, you need your data in one place. You need to understand the data, and you need to know who has access to the data.
Yeah, right. You need access to the data. You need access to the data quickly. That's right. You need to be able to use the data to understand what's happened. You need the data to understand why it's happened, and then data to be able to forecast what could happen, to build the models you need to be able to forecast, if I make this change, what's going to happen. And you need the data to keep your customers' eyes open to what's happening, to build trust and help customers to make the best economic decisions and get the most from your products.
Absolutely. So as we wrap up and think about some final thoughts here, and I brought up the data point because I think it's important that we start with measurement before monetization. Measure first. Now, don't measure too long, right? We don't want analysis paralysis, but measure to get a sense of what's happening, who's doing what, and how much with your product to understand where they're truly getting the value. And then, of course, recognizing that something that you might consider as a billing issue is actually an entitlement issue. You need to have an entitlement management system. This will help you with your experimentation of your pricing models. This will help you understand what's happening and give you those insights. And then, of course, embrace that experimentation. So much is happening so fast to vendors, to buyers, to the economic world, just so much that in 2026, be okay with putting it out there and leave yourself a way out. Try something new, iterate, embrace that experimentation. And of course, as you're doing this will help you to avoid the cost plus trap. Cost plus typically does not get you to where the value is to your customer. And that's what you need to separate you. If everybody has the same type of product and features as you, and all you're doing is cost plus, what if their costs change of your competitors? What if your costs change, right? What are you going to do?
Yeah.
And then, of course, the last two things. Go ahead, Paul.
Yeah. No, go on. You go through the last two things.
Last two things, of course, use data to drive that model evolution. We're not just going to toss the product out and figure it out later. Let's look at data. Let's do some customer surveys, do some studies, a Van Westendorp, a conjoint analysis, whatever. Figure out where we are and what our buyers want to drive that evolution. And of course, we've said this again and again, focus on your customer. The reason we put the helps vendors and helps buyers is because you want to know what helps your customer, your buyer. What are they looking at? Two vendors with the exact same product could have different monetization strategies because they have different customers. Don't just follow the market.
Yeah, great summary, Tiffany. Thank you.
So that was, as expected, a fantastic discussion. So many decisions to make here that depend on who you are, who your customers are. Definitely not one size fits all. Are you AI native or adding AI features and products? How much cost and risk can you bear? Fantastic conversation. It went just the way I hoped it would. So thank you both, Tiffany and Paul, for sharing your experience and your insights today. It's always great to talk to both of you and get your perspectives. And thank you, everyone in the audience, for joining us today. I hope you got as much value out of it as we did. Aligning price with value is a free webinar. I hope you got a lot of value. Please be sure to reach out to us after the webinar if you have any follow-up questions. Thank you all and have a great day.